Good morning, ladies and gentlemen, and welcome. My name is Steve Torsa. I'm the founder of Wholesale Investor. Just bear in mind, people are still going to be walking in for this first session, so just please make sure we make way from a seating perspective. So this is our Venture and Capital Conference. We started doing this event, in 2019 was the first time. And this is only the second time that we've actually brought it to Singapore. But this year actually marks a year for us, which is quite unique in that it represents 10 years since we actually first come to Singapore in 2014. And so for us, hosting this event, there's quite a few thematics that we would love to go through. But one of the most impressive things is to see how much this ecosystem has changed in Singapore since then. And going forward, to me, one of the most exciting things rolling out right now is how the actual entire private capital market space is going through its changes. Now, for all of us, for the last 2.5 years, pretty much the headlines that we've been driven with is a combination of fear and excitement at the same time. Whether it be geopolitics, whether it be war, whether it be inflationary concerns, whether it be hearing about challenges with innovation, funding, tech company challenges, etc. But then at the same time, you've got this convergence of technology platforms absolutely taking off. And so this is why, from our perspective, we think this is so unique. I've been communicating for the last 6 months, been mentioning how during this time, this is probably one of the most times where in speaking with founders, they feel, in a lot of ways, some have been feel beaten up, tired, all that sort of stuff. But then on the other side, they're also super excited because they can see the future coming down the pipeline in the different ways in which they can utilize AI and software for the scaling of their business. And to me, that's what makes this period quite unique. And so some of the key points that I'm going to be talking about in my presentation really cover around that. But first, what I'm going to be doing is, I'm going to be covering what were the topics for today, and I'll be highlighting that what our vision is and what we see as the future of private capital markets in general. And in that conversation, we're going to be covering venture, we're going to be covering crypto, I'll be covering private equity, I'll also be covering private credit, and then the last one, which you've never heard me talk about until literally it came on it came on our radar as a company, but I'll also be talking about some of the trends that we're seeing in private equity as well. So there's some of the key things that we'll be covering. Now, firstly, I just want to say a big thank you to our speakers and panelists involved in today. We have some incredible companies involved and some incredible speakers that are actually involved in today's event. And I'm grateful that they've allocated their time to not only just participate, but also to network with attendees as well. And also from our perspective, give their insights on what they are seeing. What I love about our opportunity and the investors that we work with is that effectively they get a helicopter view of what is happening in the ecosystem. They get to see what is happening from a higher level across multiple companies, across multiple countries, and also in their portfolio. And when you get those insights, it really saves so much time from a conversation. And I know that the majority of them are having, if you think about it, they're able to condense, hundreds of conversations into short snippets that we get to absorb today. So very much big thank you to all the different speakers and panelists involved in today's session across all the different areas. And of course, the other part that I'll mention is we've got a great range of companies that have actually come to present today. Now, I'm going to do my best to go through them as a summary. Now, for any company, if I miss talk about what you're doing, I apologize. I do my best to go from memory. Kairos Renewables, I was really impressed. I've known Edward for some time, how much they've achieved in the last in the last few years. And obviously, renewable energy is massively in the spotlight right now. They've got some big blue chip providers, offtake agreements in place. They've been able to develop some great assets and land projects as well. And I'm really fortunate to have them here today, but absolutely focused on the renewables area. And that's a key focus for us as a company. Avialto, very fascinating way in which they're looking at telecommunications, bringing a new approach to it outside of landing satellites in space and also on the ground. They're taking a sort of mid approach and are targeting a very specific market with that, which is suited to Asia. Rolo Robotics, which I'm sure you're all going to want to have a chat with at some stage today. They are basically building a robotic kitchen. Now, how can you argue with someone who's making it very easy for people to get access to fried chicken and chips on the spot, especially if it's Korean flavored? Causeway said private credit's become a massive area in Australia, and I know that yield is very much of interest to Australia. We've known the guys for about 15 years. We've known Mike and the team. They're offering private credit solutions for the business market in Australia and one of the leading providers. So strongly recommend to have a chat with the guys throughout today. Zeoform, I loved my conversation with the team in the sense that what they are doing is helping turn waste into actual high-value products where they can take waste from different materials and convert it into sustainable materials that can be used in everyday, whether it be furniture, bedding, etc. Very innovative, very unique. Performance processing, harder for me to describe because it's very technical, but it's focused around the extraction of lithium, which has obviously become, it goes through its ups and downs cycle, but obviously we know the demand for lithium over the next sort of 5 to 10 years with battery storage requirements, but they've got a unique way of actually extracting that lithium out in a higher valued way. Alltech Resources, unbelievable what these guys are working on. So once again, I just mentioned about lithium. They're actually building, they're an ASX listed company. They're building an alternative solution to utilizing the lithium battery for energy storage. And their solution is in utilizing silica as part of it. Now, obviously, sand is absolutely in abundance. They're crossing a massive milestone shortly, which we'll be announcing through WI. Which I'm very excited about. And so keep an eye on Alltech Resources. As I said, they are right in this. When I was sort of doing a deep dive on their project that they're doing, I think there's a combination of Malaysia and also Germany as well. If they are able to make that successful, that is game-changing from an energy storage perspective. Then Rapid Response Revival. For the Australians in the room would know this story. Who's heard of Kerry Packer, the famous billionaire from Australia? Okay, so there's a great story with Kerry Packer, who was a very famous billionaire, that he had a heart attack. And when he had that heart attack, he went into an ambulance. And what happened in that ambulance was it was only one of 3 ambulances in the state that had what was new at the time, which was a defibrillator. And so what Kerry Packer decided to do was buy a defibrillator for every single ambulance across the country. What these guys are doing is bringing that defibrillator into your home. And this is what I love about medical technology and health tech in general, is that they are able to provide a solution which allows every single one of us, who I'm sure all of us have got family members who've got some type of heart issues, and especially coming out the back of COVID, be able to have their own sort of personal defibrillator at home. DSG, I know Singapore is incredible from utilizing tokenization. They're one of the only approved security tokenization platforms in New Zealand, which have been out. So Ryan's actually coming out from New Zealand to come here. Innovise, we've actually just announced a recent partnership with them. They are actually one of the most successful deep tech and advanced material accelerators in Australia that have been able to work with over 80 companies to help them go from literally idea to commercialization. Their tech transfer process is so good that they've actually had NASA engage them in the US to consult with them on their process of how they're doing it. Stuart's actually flown from Adelaide specifically for today. His keynote will blow your mind with some of the stuff. They've had, out of 80 companies, they've had 4 of them already listed, and I think all of them are actually in the 9-figure mark in the value which they've actually created. So very, very cool company. And then Sustainable Concrete Group. Once again, very similar, very simple play. They're actually doing a roll-up of concrete companies in Australia, but the smart part about it is they've been able to get access to a project process for converting that concrete into sustainable concrete, right? And then with that overlay, obviously, they're then looking to create technology efficiencies with that sustainable concrete and then accelerate the growth of those businesses. So the combination of acquiring existing businesses, overlaying a tech layer to it, and then assisting with the acceleration of growth. So that's my summary of all the companies presenting. I said, as I did that I do my best to curate and understand what each are doing so that I can then articulate it to you. And one thing I'll mention with Avialto is just the communications group. What was really unique is that Walter's actually got experience in building telco companies and actually counts, I think, 1 or 2 billionaires that have actually built other telco companies on his share register and involved with the business. So that is my summary of all the companies presenting. Everything is inside Capital HQ, which you would have received an email about. The email you received this morning, it would have access to the app, access to the information that sits inside the app and all the companies which are being featured. Obviously as part of it, the way we've designed the actual rooms is to make it really simple for you to engage and connect with the companies that are participating, to go through the Q&A process, etc. And then also to ask any questions to the companies in real time. And then what I strongly recommend is just take the time. Every company has an exhibition booth just outside. Go and have a chat with everyone throughout the day. I always make the comment that for everyone, our job is to try and help you see the most relevant opportunities for you, which is why we try and articulate things in such a certain way. But also we want companies to be connecting with you. So if you receive a message from one of the companies participating, make sure you connect with them and then go and have a chat with them today. And then the last part is we've integrated this conference actually into the software itself. Whilst we're not live streaming today, we are recording today. So we will make access, we'll make all presentations available to the event over the next couple of days, and we'll also make it really easy for you to register interest in the companies that are also presenting. I believe we've sort of just got a simple QR code scanner so that you can register interest and then take your conversations from there. And then before I get into my keynote, I always recommend that the power of one conversations is massive, especially in Singapore. If there is a company that's presenting that may not be relevant for you, but is relevant for one of the investors in your network, I strongly recommend that you provide an introduction to that company, right? Because as I said, the majority of companies have actually flown here today to be a part of the event, to connect with you all and to take the time. So please make the effort to either sort of provide an introduction or, connect with them today. And then most are sort of spending another day tomorrow so they can facilitate any meetings and so forth. Okay, so now to get into my presentation. This has been my comment for the last few months. When I've been looking at, so I'm going to go into what we're seeing as a company and some of the things that we're observing, and I suppose what we look at as the sort of decade-long trends going forward, as well as some of the things that are taking place right now. I said, I believe right now is one of the most interesting times, from an investor standpoint for access to growth, high growth, and also high yield. Even though interest rates in the US started to come down, the reality is there's lots of incredible opportunities still in the high yield environment, especially in that private credit space. So for me, I'm going to be covering the combination of business, technology, and macro trends that we're observing. From a business trend standpoint, these are the 3 key factors that we see driving forward right now. I'll get to innovation in a second, but these are the 3, to me, when I was trying to form my own thesis about the direction for our business, like how do we make sure that we're providing what's relevant to investors, but also represents a great upside opportunity from the investment standpoint as well. And so the first one is the Great Succession. The amount of baby boomers retiring over the next 10 years sets in place one of the greatest transfers of wealth from the combination of that business, either succession going to family members or businesses looking to be sold over the next decade. Because as I said, as the baby boomers are retiring, there comes an incredible opportunity from that private equity side. So to me, and you said the stats here, there'll be over 500 million businesses in the world that will be going through this transformation, let alone the business owners that have actually been in their business for 10 plus years and are looking to go through their own exits as well over that time, 10 to 15 years plus. The second one is another big drive for us, the expansion of private market opportunities. Private capital markets currently sits at about $13 trillion and is expected to grow to $30 trillion over the next decade by 2023. So this, as far as for a decade-long opportunity, and we all know it, right? We all know from a stock exchange point of view, we've probably all seen the stats, whether it be the SGX, whether it be in the NASDAQ, New York Stock Exchange, ASX, the amount of companies delisting is sometimes higher than how many companies are actually listing, creating for that opportunity in the private markets space. And then the last one is the rise of non-bank lending. Obviously, after the GFC, banks started to tighten up their criteria and all the different issues they go through. This has given rise to the ability for the non-bank lending companies to actually create products accessible for high net worths and family offices to participate in, and has become a really dominant force. And from an Australian perspective, this is literally in the media nearly every day as far as the opportunities in this space. From an innovation trends, it is just hard to deny what we're already seeing with AI. Literally every single week, there's announcements that come out that absolutely blow your mind where this is actually going. And then, of course, you've got investors saying, is this overhyped? Is the trillions of dollars that have been created in value already, is that too much? Where's the revenue coming? But to me, I sort of got a slightly different take on how I see it sort of rolling out from just a core investor perspective and an business perspective. The convergence of technology platforms. October 10th, and I'll mention this again, October 10th, you're about to see a demonstration of exactly what that looks like when Tesla releases their first version of their robo-taxi, which, if you put it in simple terms, is the actual convergence of AI, computer vision, and also robotics, and also energy storage as well, just given the batteries, all coming together. And Kathy Wood from ARC, and while she gets a criticism for her own funds, it's really hard to doubt some of the research they do and how and the direction for their core 5 platform technologies around energy storage, robotics, AI, blockchain, and genomics is taking place. And then the last one, I mentioned this earlier in the year, the area of abundance that's actually being created as part of this. And to me, this is also what we're starting to see now. So the AI trends that I'm focused on, at a very basic level, the bots one is interesting to me, right? Just simply, the first one people heard about was the Kalana story, where they rolled it out through their customer service and made redundant 700 people, and they've been able to make their business more efficient utilizing bots. Now you're seeing the onslaught of actual sales bots and lead development bots and solutions coming out through the market. This is absolutely transformational for you guys as investors. Whether you're investing into B2B or to B2C software businesses, this changes everything. And I'll explain why. The co-pilot to co-worker, that instead of just thinking about something as just sitting there to assist, to think about the solutions that are going to be built by Google, Microsoft, Amazon, Apple, etc., where it can see what we're doing on a daily basis and start to actually replicate it. That is also going to be game-changing. For me, I'm already seeing it in the suggested email replies as an example. Like, I love the idea of waking up in the morning, seeing my emails and seeing the suggested replies along with it and basically just ticking it. And the next one is enterprise AI. Obviously, there's billions being invested into this. Every company has a whole bunch of information stored across all their folders. And pretty much, if you think about a lot of the tasks that get done, a lot of them are repetitive tasks, a lot of it's copy and paste, a lot of it's information from one place transferring it to another place, representing in some area. Enterprise AI removes the need for so much redundancy in a lot of the big corporates, but from a startup or a scale-up perspective, it means that we can do everything a lot faster. AI agents, like Salesforce mentioned it recently, that this is their focus going forward. Jensen Huang mentioned as there from NVIDIA, mentioned as their focus going forward. This, to me, I could not be more excited about. When I try to explain why I was just going to swear just then. When I try and explain why I love AI so much, is because it gave me back time, which is the craziest thing in the world for a founder to say, because we really don't have that much of it, right? And if we do, we create other opportunities for ourselves. But when I found it, not only did it give me back time, the productivity that it gave was anywhere between 3x to 10x on different tasks. But the biggest thing that AI has given, and this is why I love this whole area of agents, the biggest thing, and by the way, who is like an avid, active user, got multiple chat streams open, using multiple LLMs every single day? Who's at that? Okay, a very small proportion, right? Every single one of you would agree that whilst everyone thinks about the time saving and the productivity part, there's one thing that people don't really talk about that I think is one of the biggest advantages people that use AI and software tools for that gives, that no one really talks about: the increased cognitive capacity. Every single day we have to make decisions. Most founders will have to make more decisions by lunchtime on a Monday than what most people make in an entire week. And yet this makes it so much easier for us in how we represent things, how we want to communicate things, because we've got something just endlessly assisting us in actually doing it. And then I mentioned about Tesla. Full self-driving 12 has blown people's minds away. Who's seen the videos on X of like cars just driving for hours without anyone touching them? Who's seen those videos? Okay, very few. Okay, I would strongly recommend just go onto Twitter and type in FSD12 and watch the videos. It is nuts when you see cars driving for hours through cities, through windy streets, and they're not touching it at all. They released that on October 10th. That changes the game, right? In so many different ways. That's their sort of ChatGPT moment. By the way, for people staying, there's actually some spaces on the right-hand side if you want to take a seat. So for me, they're the trends that I'm focused on the AI perspective. And I love this comment by Peter Diamandis where he talks about that the future unicorns will be created with less than 10 staff. My conversations, and this is not out of school, I say this publicly and I say this internally. My conversations with my team is really simple. Every single one of my team members knows how much more productive we are utilizing different software and AI tools, right? So however much more productive we've all become over the last 2 years, whether it be 2x, 3x, 4x, 5x, 10x, whatever it is for each individual team member, in the next 2 years, I think it also accelerates at the same pace with the introduction of AI agents. But there's an upskilling that gets involved with that. But then the question that everyone asks, then, well, how does that impact? Now, for me, I get endlessly frustrated with AI experts saying that not one job will be replaced by AI. Does anyone actually believe that? That not one job will be replaced by AI? Okay, one person. Okay, let me say this. The exact companies that are building AI, how many redundancies have they made over the last 2 years? Tons. There's literally a stat the other day talked about another 60,000 jobs going out of the tech. The reason is, it said each one of yes, more jobs are going to be created in the future. Absolutely, I agree with that. But I don't know what that time transfer looks like between what happens right now and then what happens going forward. Most of the companies are actually still doing redundancies. And not only are they doing redundancies, but when team members are leaving, what are they also not doing? Replacing them. Right? So this becomes interesting for the efficiency of businesses. You're also seeing, and go have a look at all the announcements. When companies announce that they're making redundancies, there's two things that they typically mention. One, they're investing into AI. Number two, the job cuts across middle management layers and the supervisory roles. Right? And the reason is because the redundancy now can actually be built into the different software solutions that we're actually using. And then the last one is something that we're big believers in and that you're already seeing as trends in the US is AI-trained outsourcing. Because the reality is for a lot of Western countries, the employment laws have become very, very difficult, right, sometimes to navigate. And so the AI-trained outsourcing has become a way for people to get access to cheaper labor that can be incredibly productive and that can get access to the sort of company wiki through its solutions and then be onboarded a lot faster. So to me, they're the different trends. So then the natural question becomes, well, if that's the destruction or if that's the changes part, where's the opportunity? So to me, this is where the opportunity is in that, number one, an explosion of new startups, and also I'd say even the gig economy itself as well as people working across multiple companies. You can see already the reduced need for large funding rounds. Right? And they're even talking about that now, except for when they've got massive hardware requirements or massive compute requirements. A lot of the startups are or massive finance requirements because they've got some sort of fintech and they've got insurance companies or lending. The reality is they don't need as much money as what they would have literally 3 years ago, right? Because they can scale far. We've all got access to data. We've all got access to different software and AI tools. And I genuinely believe one of the questions that most investors should be asking is what is the tech stack you're using and planning to use going forward? Because that gives you an idea where the founder is headed with their solutions and then how they're using that in their own product. So from a venture cap, I won't spend too much time on this because the panel is going to be up next, but these are some of the observations from us. Number one, still an absolute ton of dry powder on the sidelines. Number two, obviously AI and robotics become obviously dominant areas. Healthcare and energy never went away. For me, this will be a core focus for us, for what I see. Like literally since 15 years ago, healthcare, life science, and medical devices always been number 2 on our list. Whatever's hot is typically number 1, and then healthcare and life science is always second because aging populations globally is a common one. And then obviously now the need for increased birth rate as well, which I said, innovation solves problems. So people keep investing in trying to solve those problems. Digital assets, obviously, dominant area for the last sort of 18 months and will become stronger as we go into the banana zone, which I'll talk about in a second, like literally a second. We all obviously saw the halving earlier this year. The ETF approvals, I know the majority of you would have crypto, but you also know that we've got family members that have never bought it. What it's like for me talking with one of my family members about digital assets or even just watching them try and buy it is actually one of the most astonishing things. Because you realize how if you're outside of the bubble, how many people don't own digital assets, right? So the adoption of that through the ETF, it means that every single trading platform can get access to Bitcoin and Ethereum is massive. And as it goes through this banana zone area, it'll be interesting to see how that unfolds from a growth perspective and also the money inflows. I love this comment by Kathy Wood with initially her target for Bitcoin by 2030 was to go to 1.5 million, which I'm sure of us would love. Like, is there anyone that wouldn't love to see that happen in this room? All right. Who would love to see that happen out of curiosity? Okay. So they're the crypto holders. And then the last one is now the projection from their side is for it to go to $3.8 million for one Bitcoin. And the thesis behind that is if the wealth managers and the investment banks and the big institutional investors just start allocating up to 5% of their portfolios, it changes the game. Now, I should have added the Ethereum one to that because that also is reflective of the direction that it's going. So once again, there's a panel session for this, but I won't spend too much time on it, but I've sort of talked to the panelists about covering this as some of the topics. These are some of the areas that have become obviously hot this year from an interest perspective. The real world asset token is a funny one for me because we've been working with companies in this area for 2020, but they rebadged it, gave it an acronym, and then all of a sudden it's become hot over the last 12 months, which I find interesting. But this has been a logical play for some time. Anyone involved in funds management, very few people think that funds management's an efficient business. I know it's more efficient in Singapore than what it is in Australia. Setting up a fund and the fund management is just ridiculous in Australia compared to what is that potential for the tokenization and obviously the software and AI-driven solutions. DPIN, once again, I hadn't come across this area until earlier this year when one of my advisors raised a company through a whole bunch of crypto funds in Singapore. They invest into their DPIN solution, obviously a strong area, and I won't go through all the rest. The one which I don't talk at all about and will not be entertaining on the panel session is the meme coin area because God knows where that goes and how that sort of drives, but I'm sure the insiders would. But the last one I think super interesting is the AI and crypto convergence. I do love a solid rebrand. Obviously a lot of the rebrand for the last bull run of crypto was Web3. Unfortunately, after that rebrand, a lot of people lost money. So of course, like good innovators, we rebrand it and call it Web4. So the area of Web4 is also super interesting. And the new one that we're talking about from private equity, and this has become more dominant. In the US, there's more of a trend of when people are coming out of colleges, what more and more are doing now, instead of the path of actually going and starting a startup, what they're now looking to do is to take over traditional businesses, add a layer of technology, and then go and scale those businesses. So PE, I find it interesting, a lot more of the PE funds are providing products for high net worths. In Australia, we've got some of the bigger PE funds as our clients. What started out as a 5 mil minimum, they're now making 100K minimum so that high net worths and family offices, smaller family or multi-family offices can participate. Business succession, I've already talked about that. The acquisition, like companies like Constellation Software, Who's come across the Canadian listed company Constellation Software? Okay, few. This company has done nothing but roll up software companies. They have listed on the Canadian Stock Exchange. I believe they're somewhere between $30 to $60 billion market cap. All they do is acquire profitable software companies. So for founders, this is our ability now to get to profitability is much easier than what it was 3 years ago. And it means that groups like this become in play for us as an exit target. And what that also aligns with is the forever acquisition model. So the typical PE fund has a life cycle of somewhere between 7 to 10 years in which they need to acquire the asset, build up the value, and then move it on either through secondaries or move it on through an IPO. The forever acquisition model, when you actually see it laid out, is incredibly intelligent. They acquire profitable businesses, they improve the efficiency of those businesses, and then they use the cash flow from that improved efficiency to then go and acquire more companies. We are seeing more of these companies coming out in Australia. I'm sure there's more solutions like this also coming out in Singapore. And then also the last one being the growing interest in search funds. So while many of you invest into innovative private companies as a venture investor, there's also more investors that are scrolling through the business for sales sites looking for companies to actually acquire that actually spit out cash flow. And so now there's also people that got increased reputations where they're professionalizing their process. They're raising money for search funds to go and look for targets to actually go and acquire, and there's specific SPVs for acquiring those companies, which they allow high net worths to participate. So this area has become very interesting to us because it represents a growing trend that we're seeing. So I went backwards, not forwards. There we go. Okay, now last one. Who would have thought you'd come to a presentation where it would cover crypto, private equity, venture, what's happening in AI, and then the last one, credit. Once again, this has become the talk of, who actually reads the AFR out of curiosity? I know you probably read local. Who reads the AFR just to understand? No? Okay, only the Australians that are here. So the AFR at the moment, the Australian Financial Review, is covering this almost every day. This has been the biggest growth area in Australia where a lot of the investors decided to allocate their capital to the private credit space. And from an interest perspective, some of the returns they're able to get is anywhere between 12 to 18% IRR on the different projects that they're investing into. We're fortunate enough that we work with some of the bigger players actually in this space and companies that have been doing this now for 5 to 30 years that have just suddenly become in the spotlight of this space. But effectively, industrial property remains the top area of interest in Australia. Residential property second individuals that are refinancing their homes through non-bank lending providers, is a very, very popular area. And business credit, we've actually got Causeway here with Mike, who's going to talk about that, and we'll cover that in our sort of fireside chat that we have. And then commercial property. Now, I mentioned that in specific in certain areas because there's definitely some areas where it's not post-COVID, the work from home situation, etc. There's areas where it is hot. There's areas where it's actually struggling. But the commercial property is still a strong area, but that's the list of order of interest from investors in Australia from their interest perspective. So the macroeconomic factors, I'm sure you guys are all across this, but obviously we're all watching what's happening on the US interest rates. In Australia, our interest rates aren't going down anytime soon. You're probably seeing a nice little battle between the RBA and the federal government about how they're playing things out. So from an Australian perspective, the private credit opportunity is not going away anytime soon. Obviously, the increased liquidity, everyone's expecting some sort of increased liquidity over the next sort of 12 months into the actual, into the markets. Dry powder coming off the sidelines as interest rates, start to go down. And then the last one is no one can deny the amount of attention being captured by the US elections, over the next sort of, was it 40 days now, 35 days, which if it's as wild as what it's been for the last 2 months, it should be a very, very interesting next month or so. So they're obviously the factors driving that we're watching. I'll just quickly talk about us in my last minute. If you haven't been across Wholesale Investor for a long time, we've actually built a distribution network of 45,000 now across Australia, ASEAN, and the UK. ASEAN sits at about sort of 5,000 to 6,000. UK also sits at 5,000. Capital HQ, which is our software solution that we've built for managing the process. We've also attracted 28,000 to that platform. And we've got brand recognition now across Australia, New Zealand, Singapore, and also the UK. Effectively, these are the areas that we're focused on as a company. Most people know us from the innovation space, but don't realize that, in fact, I'd say 38% of what we deal with is fund managers and financial services companies. The other two strong areas is in life science, medical device, healthcare, renewable energy, etc. They've all been sort of strong areas for us. Whilst many of you know us for our events and our in-person activities, we've invested heavily into our software solution to simplify this process of engagement. Everything we think about is how to remove the friction between you and the companies that we work with, but also just companies in general. So we're trying to think about how we can increase investor access and also save time in the actual process. So different initiatives that you guys can participate in and that you can have a chat to us about. I won't spend too much time on them at all, but number one is we've built basically the three, actually I won't cover that. Effectively, the unique thing that we've done is just making investors accessible. One of the most frustrating things I have about this space is that everyone seems to have their group of investors behind them. We just want to help the enablement of access to investors so that everyone can find the relevant people suited for them. And that's all we're trying to do. We're trying to simplify and streamline things and make things as relevant as possible. And so for me, we've got a strong focus on building marketplace. We've also got a strong focus on in-person activities. And also, key things that we would love to speak to you guys about is we do have a channel partner opportunity, which we would love to chat with people who have great access to private market opportunities in Singapore about. We're going to be releasing a business sales and M&A product very shortly. We're doing a soft launch in November. And that's going to be a core focus for us because that market is 10x the size of innovation. And then obviously just focused on enterprise solutions as well. We're starting to work with a lot more advisory, a lot more accelerators, and also different, the accelerators and the incubator groups as well. So the different opportunities with us, you do have the opportunity to be a channel partner. If you're interested in that, please come and have a chat with me. You can see who I am now. Please have a chat. And then also we do have an opportunity to participate in a convertible note. We always take an ecosystem-led approach. We're fortunate enough to have shareholders from 9 different companies. We've got shareholders in the room today. And, and even more than that, we count VCs, backgrounds of PE, financial, all involved in this space, as part of it, including family offices, venture VC groups, etc. But this is our convertible note opportunity. So not only can we provide access to other investment opportunities, we're also an opportunity for the day as well. So feel free to come and have a chat with me about that. And I've gone 1.47 minutes over. On that note, thank you very much. I hope you enjoyed the introduction. I said I do my best to try and give a summary across all aspects of this space. I hope you enjoy venture and capital. We've got an incredible lineup of companies. And next, I'm going to hand over to our host, who will introduce the panel session.